To a certain extent, it is the case that, as you were saying, that the BOJ is still the most dovish central bank out there. The Japanese rates are the lowest out there, and by implication, the yen is the weakest currency. It's simple as that. And compounding the problem is that, say, for Japanese exporters that have to decide at what level to repatriate earnings to buy yen, the fact that it is a moving target means that it can delay and delay and delay any repatriation. For Japanese investors that are known to own a huge amount of foreign assets, treasuries, EGBs, similar thing. They need to decide at what point they need to bring that money back. And the problem is that that line in the sand where the yen sell-off stops remains elusive, and that is compounding the problem.
Well, here's the rocket science. And again, I am no central bank expert, but I've spoken to one or two in my time, including Kuroda. And I mentioned these issues to him literally about 10 years ago, and he said, oh no, if we don't solve it by the end of the decade, we've got problems. Well, guess what? We're 4 years beyond the end of that decade. If they want a firmer yen, why don't we save the money from intervention and actually just hike rates?
I think that's ultimately going to come. We think that the more the yen depreciates, the likely it is that the BOJ will be hiking before too long. I mean, the markets are looking for another rate hike. I mean, the OS markets move slightly higher. I think that further acceleration of the move will likely precipitate that. I think more importantly, and something that is flying under the radar, is the fact that the Japanese yields have been creeping back up, right? And it is the case that, at least anecdotally, what the Japanese investor will tell you is that I mean, at the moment, the long end of the JGB yield curve were to reach 2% or start exceeding that, the JGBs will become bona fide high-yielding assets. They don't have to go to the US or come to Europe for yield. They all can do is just bring money back. If you look at the 30-year JGB yields, we are already above 2%. If you look at the 20-year, we are 192, I believe. 10-year is still around 1%. But the thing is, the BOJ is also reducing the pace of its purchases, meaning that over the longer term, that is ultimately one of the main supports for the yen, which I would expect to come, right? So I think that selling the yen here, right, on a fundamental basis, I get the point, but ultimately that's a losing battle.
Sorry, just keep this very short, because I don't care. What is the percentage of the Japanese bond market that the BOJ owns? I mean, all of it?
Well, almost, but it is the case of the free flow anyway. But the point is that they're in full control of that. Right. You can say that, yeah.
Is it just a matter of time for the Japanese to wait it out? And if you look at the data that rolled through the United States this week, with 4-week average of US jobless claims, that has now risen to the highest level since September. And the labour market has been one of the last areas the market has been looking for some change here. So is it just a matter of time?
I agree. I mean, that's the strategy. They have to really just make sure that we avoid excessive moves. I mean, they're conscious of the weakness, but ultimately, you would think that the outlook for U.S. rates and yields is lower. By implication, dollar yen should hit lower before too long. And the point you mentioned about the rate differentials, it is quite telling that if you look at, say, dollar yen rate spread, yield spread, these are pointing at much weaker dollar yen. I mean, if you were to kind of overlay and and it is the case that it is looking a bit speculative what's happening with the yen, right? So yes, there are fundamental reasons to believe so, but if you just look at the forward-looking nature of the moves, right, sometimes I really don't understand why people are selling the yen, given that the US data is heading where it is, and given that the dollar is at the moment actually losing rate advantage against the yen, and that is evident from what we're observing. So we've been trying to fight the move, clearly, right? So we've been trying to sell dollar yen just because to us it made fairly little sense. But for the time being, it does seem to be the case there are quite a few people who are willing to essentially call the Japanese, the bluff of the MOF and the BOJ, tell them, listen, okay, we dare you, right? Yeah. When are you going to intervene?